Welcome to the Riskwiser Zone, the show where we dive into the world of stocks and finance to help you make informed decisions about your investments. We're starting off with a big story that's been making headlines in the financial world. The U.S. stock market has taken a hit, with the Nasdaq experiencing a significant crash. The Dow Jones Industrial Average also fell, and the S&P 500 lost over 2.6% of its value. So, what's behind this sudden downturn? According to reports, the strong jobs report released by the Labor Department, which showed that the U.S. economy added 172,000 jobs in May, has raised concerns about interest rates. The robust report has all but killed any hopes of an interest rate cut from the Fed in the near future, and financial markets are now pricing in a growing likelihood of a rate hike at the conclusion of the Fed's December meeting. The tech sector has been particularly hard hit, with companies like Nvidia, Intel, and Micron experiencing significant losses. The semiconductor sector, which had been performing well, is now seeing a sell-off due to concerns about overvaluation. However, some experts believe that this correction is not necessarily a bad thing, and that the market was due for a pullback after a record run. It's also worth noting that the ongoing tensions in the Middle East, particularly the Iran war, are weighing on investor sentiment. The conflict has raised fears about energy price pressures and wider systemic inflation, which could have far-reaching consequences for the global economy. As we navigate these complex and rapidly changing market conditions, it's essential to stay informed and adapt our investment strategies accordingly. We'll be keeping a close eye on these developments and bringing you expert analysis and insights to help you make sense of it all. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of prediction markets and digital finance, where two key stories have caught our attention. First, McCap MediaWire reported on UNO's plans for a global prediction market platform that combines event-based trading with social infrastructure. This is an interesting space, as it aims to bring together community-driven forecasting systems and real-time market pricing. On the other hand, we also saw TerraVest's chairman being accused of insider tipping, which led to a slide in their stock price. These stories highlight the complexities and risks involved in the financial markets. UNO's platform is designed to provide users with a transparent and community-driven experience. But as with any investment, there are risks involved. According to UNO's CEO Holtz, the future of prediction markets is not just passive participation. Users increasingly want transparency around market participants, stronger community interaction, and ways to build credibility over time. This statement underscores the importance of trust and infrastructure in these types of markets. As we explore this space further, it's essential to remember that trading on prediction markets involves risk, and past performance does not guarantee future results. UNO is targeting average monthly volume of approximately 200 active users and $4 billion in total volume by the end of 2027, subject to platform launch timing. We'll continue to monitor these developments and provide updates as more information becomes available. For now, it's clear that the world of digital finance is rapidly evolving, with new players and technologies emerging every day. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's dive into some exciting market news. We have two significant stories to share with you, and both are making waves in the investment world. First off, a major development in the metal recycling sector. CMR Green Technologies, India's largest non-ferrous metal recycling company, has seen its initial public offering, IPO, subscription reach an impressive 127 times. This overwhelming response is largely driven by institutional investors, with qualified institutional buyers, QIBs, subscribing to their allocated shares a whopping 270 times. The IPO's gray market premium is hovering around 40%, indicating a likely listing price of approximately Rs 269 per share. Analysts are divided on the issue, with some highlighting the company's leadership in aluminium recycling and exposure to sustainability themes, while others flag risks such as customer concentration and thin margins. In another significant move, we saw a major transaction in the secondary market. The Adani Group's stocks have been under pressure, but that didn't deter investors from putting in large bets on other stocks. In a surprising development, shares of SBI and other banking majors were in focus after the government announced its plans to infuse capital into public sector banks. On the other hand, we also saw some profit booking in the metal space, with shares of Hindalco and Vedanta falling sharply. The selling pressure was largely driven by concerns over global demand and rising input costs. In a separate development, the market is also watching the developments in the Adani Group saga closely. While the group's stocks have taken a beating, other companies in the same space are seeing increased interest from investors. As we conclude today's episode, it's essential to remember that investing in the stock market always involves risks. It's crucial to do your research, set clear goals, and never invest more than you can afford to lose. With the markets constantly evolving, it's essential to stay informed and adapt to changing circumstances. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.